Hello and welcome to another weekly update, and it has been a great week, very interesting week, lots of developments to talk about. The reason we talk about, by the way, what the overall market is doing is not just so you can bet with the market, but all your trades are affected by what the overall market is doing, especially the one we're looking at right now, which is the S&P 500. A rising tide floats all ships and vice versa. So it pays to keep an eye on this. Now, the big development for this week is that at long last, this downtrend is broken. Let me show you. This is what I've been looking at for the past few weeks, but if you've just been joining us now, here's what a big deal is, and that nobody has really noticed about Friday's or last week's action. Now, Friday itself was a kind of lackluster kind of day, but people don't. The story that nobody's picking up on, all the talking heads and all the chatter, is what I'm about to show you right now. The downtrend is broken. That doesn't mean it's a brand new bull market, but it does mean that there's a possibility that the bear market is over. At the very least, we're about to see a swing upwards, and there's so many people, the chicken littles, who are bearish on everything in life, saying that the world's about to descend into recession, and it may well do, but the stock market does its own thing. Whether there's a recession or not, this downtrend is broken. What happened last week is right here, and the chances now favor. Remember, we never make absolute predictions because nobody knows really what's going to happen. It's always about looking at the odds. But if this chart's anything to go by, and I suspect it is, there's good money that I would lay on this market is going higher in the medium term. Now, this week coming up, it's a little bit stretched. It did well last week, and it may need a rest, so it may pull back, consolidate a little bit. But the point is that the downtrend is finally broken, and the worst is looking like it's behind us. Let's zoom in on the daily chart here. And there we can see Friday's action. It was on decent volume. This closed around the midway point of the price action during the day. Typically means a change in direction. So it won't be surprised to see a little bit of a pullback, and that's fine, because as long as it doesn't pull back too far, it can certainly is due for a breather. Now, another thing that's important right here, see this blue line, the red line? This is the 50-day moving average. This is the 200-day moving average. If this blue line crosses up above the 200-day, that's called a golden cross, and that typically means, again, higher prices ahead. So that is very close to happening, teasingly close actually. All the other indicators I look at are saying that this market is looking to go higher, and it has a little bit of room to run. Not much. The volatility is low and trending lower. That's good. The moon cycle we're in, which is very important, believe it or not, is still waxing. So that means that's a bullish thing. So that's in favor of things. Here's the Dow Jones. They have been trying to lead this way out of the bear the whole time, and they are now. The S&P has joined the Dow. What about the Nasdaq though? Because that was really the party pooper in all this. The Nasdaq must agree with the others. So what is the Nasdaq saying? So this chart is a little bit trickier than the others, but the Nasdaq led the bull and it also led the bear, which is common. But we can see there's the line, a much sharper downtrend, and it also broke. In fact, that's the first weekly close above the 40-week moving average. So the Nasdaq is now agreeing. We have all the indexes agreeing that the downtrend is over. And there's the short term there, the Russell short, the small companies, which is kind of a canary in the coal mine. That's also was ahead of the game there. Things are slowly pulling up out of that nosedive. That's where we're at right now. It's like that point in the movie where this thing's been in a nosedive for ages, and they're just desperately pulling back on the controls, and it's finally starting to, the descent is over, and it's just pulling back, pulling up out of it slowly. So here's the dollar for the Forex people. As I keep saying, that vicious uptrend is now turned into a vicious downtrend. Could be leveling off around here. It's looking, this is no man's land right now. You can't really say the dollar's bullish or bearish right now. It's just kind of sorting itself out, taking a breather. So could be anyone's game in the Forex markets. Here's the bonds, US Treasuries, which is the reason why interest rates have been going up, not the real reason but they've been telling you, which is this inflation narrative, although it may seem like it because of the COVID shock. Now, there's that line there, 107.09. On TLT, this is the 20-year Treasuries. we really want to see for interest rate cycle to start easing back and start coming down again or leveling off. We want to see this break above up to about 110. When you see TLT get to about 110, you can bet they're going to ease off, which is something that the stock market, of course, is also looking at. The star of the show that I've been talking about for a while is copper. Copper is called Dr. Copper for a reason. It's telling you what's really going on in the world economy. In the midst of all the doom and gloom recession talk, copper has been marching its way out of this downtrend very nicely indeed. So copper is disagreeing with all the doom and gloom narrative, and I trust copper a lot more than the talking heads. Here's Bitcoin. It's still a train wreck, but it might be starting to pull up a little bit. This is actually the ETF of Bitcoin, which is much more reliable than the actual coin price from a charting point of view. Bitcoin really needs to get above, back above 15, back above its 40-week, and start trying to repair this horrendous damage. So right now it's still really not that tradable, but we'll keep an eye on it as always. There's America's housing market. There's the boom. It's starting to come back down again. No surprises there. Here's gold. Gold's looking very stretched right now, and this hasn't been a tradable chart for a long time, all over the place, up and down, up and down. So that's anyone's guess. And there's oil, and there is that. The downtrend sort of more turning into a sort of leveling off now, and so goeth the price at the pump. Finally, let's check in on my double your way to $1 million, taking $1,000 and turning it into $1 million. That's going to be in a separate video, but there have been some new developments this week, and APLD has been leading that action. So I'll speak to you in that video, and I will speak to you next time for the market updates.